Welcome, everyone, to a critical discussion about the economic landscape we might face in 2026. The global economy is a complex, interconnected system, and several powerful forces are converging that could lead to significant upheaval. We're talking about a period where volatility could become the new norm, affecting everything from international trade to your daily expenses. Today, we'll unpack the major drivers of this potential economic chaos, the escalating trade wars, the transformative yet disruptive power of artificial intelligence, and how these global shifts will ultimately impact you, the individual citizen. Understanding these dynamics isn't just for economists. It's vital for everyone to prepare and navigate what lies ahead. Let's delve into what 2026 might hold. The era of open global trade, as we've known it, appears to be increasingly challenged. We are witnessing a resurgence of protectionist policies and geopolitical rivalries that are directly fueling new trade wars. Nations are imposing tariffs on goods, creating significant barriers to free exchange, and deliberately disrupting established supply chains. This isn't just about economic competition. It's deeply intertwined with national security concerns and the race for technological supremacy. These actions force multinational corporations to rethink their manufacturing bases and sourcing strategies, leading to higher costs, reduced efficiency, and ultimately impacting consumer prices and the availability of goods across the globe. The ripple effects are already being felt, and they're projected to intensify.
Artificial intelligence is perhaps the most transformative force of our generation, presenting both immense opportunities and significant challenges. On one hand, AI promises unprecedented productivity gains, fostering innovation and creating entirely new industries. On the other, the rapid advancement of AI-driven automation is poised to displace a substantial number of jobs, particularly in sectors reliant on repetitive tasks and data processing. We're talking about profound shifts in the labor market, demanding new skills and a reevaluation of traditional career paths. While AI will undoubtedly generate new roles, the transition period could be bumpy, leading to job market uncertainty and requiring proactive measures in education and workforce retraining to bridge the emerging skills gap.
Beyond trade wars, the global supply chains are facing multiple points of failure. Geopolitical tensions, such as regional conflicts or blockades, can instantly halt the flow of goods. Increasingly, climate events like extreme weather, droughts, and floods are disrupting critical infrastructure and agricultural production, leading to critical resource scarcity. We saw glimpses of this during the pandemic, but the confluence of these factors paints a grimmer picture for 2026. Manufacturing delays become more common, driving up costs and creating shortages of essential products. This fragility means businesses must invest heavily in diversification and resilience, costs that are often passed on to consumers. Our reliance on just-in-time delivery systems is proving to be a dangerous vulnerability.
Inflation, which many hoped would be transitory, has proven to be stubbornly persistent. A combination of factors, including supply chain disruptions, energy price volatility, and robust demand, continues to push prices upward. Central banks globally are caught in a difficult position. Their mandate is to control inflation, but raising interest rates too aggressively risks triggering a severe economic slowdown risk. This policy dilemma means we could see a continued cycle of interest rate hikes as central banks try to cool economies, potentially stifling investment and job creation. The balancing act is precarious, and missteps could exacerbate economic instability, leaving consumers to grapple with higher borrowing costs and diminished purchasing power for the foreseeable future. Many nations entered this period with record national debts, significantly accumulated during recent crises and spending initiatives. As interest rates rise, the cost of servicing these debts, paying just the interest, skyrockets. This creates immense fiscal instability, diverting a larger portion of national budgets away from essential public services like healthcare, education, or infrastructure. In extreme cases, governments might face sovereign debt crises, leading to austerity measures, currency devaluation, and deep economic recessions. The pressure on governments to balance their books without stifling economic growth or cutting vital public services will be immense, and their choices will directly influence the economic health and social stability of their citizens. So, how do all these macro trends translate to your daily life and your financial well-being? Firstly, job market uncertainty means that traditional career paths may be less secure, and adaptability will be key. Secondly, declining purchasing power due to inflation means your money simply won't go as far, making everyday necessities more expensive. Thirdly, investment volatility in financial markets can erode savings and make future planning challenging. For the average citizen, this requires heightened awareness and proactive financial planning crucial. Understanding these risks allows you to make informed decisions about your career, savings, and investments, helping to mitigate the personal impact of global economic turbulence. While the outlook for 2026 presents significant challenges, it's not a narrative without agency. There are concrete steps individuals can take to build resilience. Firstly, focus on skill adaptation by acquiring new, in-demand skills, especially those that complement AI. Secondly, diversified investments across various asset classes can help weather market volatility. Thirdly, establishing robust emergency funds is more critical than ever, providing a buffer against unexpected job losses or expenses. Finally, fostering community support networks can offer both practical and emotional resilience during tough times. Proactive planning, continuous learning, and strategic financial management will be your strongest tools in navigating the economic chaos of 2026 and